Good evening traders, it's Simon at Kairos Capital Markets. Today I'm showing you the basics of a top-down approach and just how you can use it within your trading. So what I've done is I'm starting from the quarterly chart. It's cleaner the higher time frames it is. You can do this approach on virtually any way you want. So if you say you want to trade for 1 minute chart, you can do the 1 minute. You can do the 1 minute chart being the lowest, 5 minute being the second lowest. You can then do the 15 minute. You then do the hour and the 4 hour, or you can do the 15 minute, 30 minute, 1 hour. Depends how you want to do it. But I just want to show you from the highest time frame possible, really, with like there's some form of structure to it. It's half decent, which you can then gauge later on. So this is the EuroCAD quarterly chart. This is. Now the first thing I see here is we've got these highs here are getting lower and lower. So we can definitely draw a trend line in there. Something like that we could draw. So we got some form of downward sloping trend line happening, which is quite nice to see. And we can see the price here is just around this trend line here, which is quite nice. And then we're going to put a floor into this, and I'm going to use 1.3. The reason why 1.3 I think is quite nice is because it's it started here. You got a little touch in the middle there, a couple of touches there. It did break out a little bit, and it looks like almost kissed it there as well. So 1.3 is quite nice. Multiple rejections, so we can then turn around and say now this looks like a triangle. So we now have a structure of what we're looking for. So when we look at this chart here, I would definitely say it will most likely move down or at least decelerate around this area here on the lower time frame. So let's have a look now. So I'm just going to drop down to the monthly chart using the same lines we've got already. Zoom back out again, and we can see straight away we've got this little up and down candle here. So to me personally, that's a rejection of the trend line. It is. That looks nice, but we also notice here we've got multiple rejections around this area here as well. So let's draw another level in. Let's draw that in at, let's look at 1.5 to start with. Hold on guys, sorry about that, 1.02, it's not very good. Now 1.5 looks quite nice there, it does. We can definitely see now that we've had multiple rejections of 1.5. You got a couple there, 4, 5, 6, 7, 8, 9, and it looks like a 10th one's happening now. So I'd say on the monthly chart we've got 10 rejections of 1.5 area. So what do we have so far? Downward sloping trend line, price has moved up to the trend line and the 1.5 area. So for me personally, that's a good area of interest to look at. It is. So already I had now my long-term chart of the quarterly chart said I think it moved down. The monthly chart is now saying another added confidence factor. It looks like it's going to move down as well. So next one we'll go to the weekly chart. We will. Now I think it's bearish on this chart here. I think this chart is here and it's bearish. So let's zoom in now here. What do we have? Well, we've got lots and lots of high tests here, and we can draw another line in now, yeah, at 1.52. 1.52 is also key on the weekly chart. You can see we've got 1, 2, 3, 4, 5 rejections there. And you zoom out here a little bit as well now, we've got another rejection, little rejection. So we can almost turn around and say now that the weekly chart has a zone between 1.52 and 1.5. So I'm now going to draw a zone in here. And there we are guys, there's a little zone, and that there is an area of interest. And now what we're looking for now to confirm that we think this is going to go lower, we need some bearish price action here. So let's look at the candles to start with. What do we have? We've got multiple higher tests and deceleration around this area. So notice how price has not been able to break above the downward sloping trend line and the zone. Also notice how the price has broken out of the zone for the weekly chart. So for me now personally, it confirms my bearish position here, what I think it would be. Now there is one thing you do have to put in here now. We can definitely see on this chart an upward sloping trend line of some sort there. And so really, in all fairness, what the question to ask now is this, is what confirms this break of the trend line? Well, once it breaks down below here, let's say to 1.48 area, I will turn and tell everyone that I think it's now bearish, and I'll be looking for value areas. So I'm now going to go down to the daily chart now. So I've decided that once we break this upward sloping trend line to the downside, I will then say I'm looking for bearish value there. So let's drop down to the daily chart now. The last one I'm looking at, And here already, have you noticed this area here of 1.5 being respecting the daily perfectly as well, multiple times, and 1.52. So that our area is, this is a key area. It's beautiful to see what it's done, and I'll be looking now for a move lower in the next couple of days. So something like that, and then to come back up to test this 1.5 area. That's what I'm looking for next. So when we get the test, the break and retest of 1.5, I'll definitely like to see an entry there, something like that. You can put your stop maybe around there, and then you can now target another area. Now, for me, when targeting, we can then go back to the higher time frames again, can't we? Because we have a view that it could go down to 1.3, because every time it's come off this trend line, it's come down to either 1.5 or 1.3. The fact that 1.5 is out of the way now, 1.3 is so ideal, because look here, it was at 2, broke down to 1.5, popped back up, then went down to 1.3, grinded its way back up, tested trend line, straight back down to 1.3. So for me personally, 1.3 is definitely the next target on the quarterly chart. So this trade could last months. I mean months, like 6 months, 12 months, and maybe even 18 months long this could be. But in this scenario, that's what we like to see. So we've got now a target as well. Back to the daily chart, and let's have a look. And so you have to ask the next question, is this stop safe for you to go, I'm happy to go in there? If it comes up, chops around, then comes back down again, and you get a stop like that, you type in 1.3, and you've got an 8.5% risk, 8.5% profit there if you do 1% risk. But this trade takes a long time to trade. So you've got different ways of doing things. You could do it, I want to do to the next level, or whatever else. So you could be trending, you can be shorting this trade, and you'd be going with the trend, even though this is an upward trend here. The whole daily is an upward trend, but it's been decelerating. Now another thing as well I'd like to point out to you would be this. I'm going to take all the lines out now again, just to show you something. To confirm this pattern, I think we might have a wedge forming. So there's your, that's the worst case scenario trend line. That's the absolute worst case scenario. And here, guys, is your wedge. So overall, this is a rising wedge in a bear market. So this rising wedge has happened on the daily chart, where the quarterly chart is bearish, as we already seen before. So I'll keep going back to this quarterly chart. So the quarterly is bearish. We've got a rising wedge on the daily chart, which says to me another potential move to the downside. And this is how you do a top-down approach, and it's exactly how you do it. You have a view on the highest time frame which you want to look at, and then you break it back down again. So if you was, for example, say a day trader, you would use the hour chart like this. You would to suggest whether it's up or down trend, and then you go down to the 30-minute, the 15-minute, the 5-minute chart to confirm your analysis, each step by step. And this, although it's on the quarterly chart, it doesn't matter. That's how you do it with other time frames as well. And you just want to confirm every move, be confirmed. If it's not confirmed, go to the next trade. Simple as that. The reason I like these higher time frame trades, so they take a long time to develop, and it's easy to look at it and rethink it and question yourself things, because if you're in the middle of the daytime, you're a little bit tired and you've got to make this judgment straight away, it's always going to cause you a bit of aggravation. You might get it wrong, you might not be able to think quick enough, and this is where the higher time frames come to your to give you the experience possible. And when you start doing the higher time frames, then go into the lower time frames to actually learn what you want to do properly, and you'll become a much better trader, make more informed decisions, because you know about how the process to start with, have experience with the process, and have experience with looking at price action and everything else, so you don't second guess yourself. And because on the lower time frames, by the time you second guess yourself, done the analysis, what's this video, 10 minutes long, in 10 minutes time your trade will be completely at the window, value's gone, it never pulls back, you miss it, then you get frustrated, and that's how it works. So start the high time frames to start with, get yourself the process working, then work your way down that way. Okay guys, take care, and I'll speak to you soon.